It's remarkable how the economic and political cycles have come together in yesterday's decision, because Labor really have been praying for a rate cut, and it's amazing that it happened just as they're about to call the election.
There's actually not a lot of case law on situations where employees are away all over the shop.
The offering I've made is we are prepared to take a direct approach to provide regulatory relief to an entity wanting to come in and disrupt this market.
They're not quite certain about what the neutral rate of interest in the economy is, so that maybe presents a little bit of an argument for taking a slightly more gradual approach, going in increments of 25.
Welcome to the Weekly Wrap, where we go over the top video stories from the past week. First up in this week's Underarm column, Australia correspondent Lachlan Cahoon delves into the coinciding economic and political cycles, just as Anthony Albanese got the rate cut he has been praying for. But will it be enough to help him win the election? Some big news in Australia yesterday, with the Reserve Bank cutting interest rates for the first time in 4 years. The 25 basis point cut is good news for the economy, but even better news for the Labor government as it heads into an election which must be held by May. Let's bring in our Australia correspondent Lachlan Cahoon. So, Lachlan, the RBA seemed almost unconvinced about the rate cut. What did they say?
Yeah, well, John, the timing is incredible with this. But as you say, the RBA seems strangely unconvinced in their decision. Yes, they cut rates for the first time in 4 years, as everyone predicted, but they said that the outlook remained uncertain and that cutting rates too quickly, and I quote, disinflation could stall and inflation would settle above the midpoint of the target range. So it means that while they cut rates, they didn't exactly sound too dovish on more cuts to come, which is what the market has been waiting for, which brings into question the timing for the cut. Why yesterday?
So is it unusual for politics and economics to coincide like this?
The timing is incredible with an election due by May. This happened before in 2007. Then the RBA raised rates during the election campaign, and the coalition, the Howard government, lost that election after 11 years. They possibly would have lost that election anyway, but certainly it was very unhelpful for them when Glenn Stevens raised rates in the middle of the 2007 campaign. This time the rate cut is also benefiting the Labor Party. It's remarkable how the economic and political cycles have come together in yesterday's decision, because Labor really have been praying for a rate cut, and it's amazing that it happened just as they're about to call the election.
How welcome is this news then?
It's heaven sent. The government has been praying for it. They've been under pressure over the cost of living. They're down in just about every poll. The government's been saying their policies will deliver a soft landing, and yesterday's rate cut will prompt a huge victory lap. The government has had a terrible 2 years. They've allowed the opposition under Peter Dutton to take the initiative and get ahead in just about every poll. So this rate cut yesterday is just what they needed as a circuit breaker and a reset for the election campaign.
How much of an impact will it have on the election?
Look, it's difficult to say, but as an intervention, it is significant. Funnily enough, Peter Dutton, the opposition leader, has been saying that the RBA shouldn't cut rates, and that gave Labor the opportunity to say that he was self-serving and that people's economic pain was his gain, because who else would benefit from no rate cuts apart from Peter Dutton politically? So they've managed to turn the tables on him a little bit. Certainly the rate cut gives Labor some economic credibility and kind of changes the narrative as they go into the election. Everything has been about how the government has been indecisive and has been failing to deliver on any of its promises. Now they can point to the rate cut to say, look, what we've been doing is working. But regardless of what happens, it's certainly going to be the starting gun for the election campaign. And we may have the election date called in a matter of weeks, and everybody's predicting it'll be by May.
Any indication of further interest rate cuts?
Well, I don't think that in the RBA statement yesterday there was really any indication that they were planning to do any more cuts. Most of the analysts have been saying that there'll be a couple this year. But if you have a look at the RBA statement yesterday, and this is what was so curious about it, they really weren't pointing towards any more cuts. They were saying, basically, yes, inflation's back within the target range. Certainly CPI inflation is, but the situation's uncertain and we're going to monitor it. So there are no promises of any more cuts.
Employee absenteeism laws are ripe for reform, but Lane Neve partner Fiona McMillan says it's unlikely there will ever be hard and fast rules on the issue. Co-editor Hamish McNichol has the latest.
What can an employer do if they think an employee's sick leave is not genuine? I'm joined by Fiona McMillan. Fiona, what's the difference, I guess, between medical incapacity and just general absenteeism?
Yeah, so they are terms that are interchanged a little bit, but medical incapacity is the situation where someone is away for a set period of time or a long period of time. So they might have broken their leg and they may not be able to be at work for 3 months, etc. Absenteeism is the situation where you've got an employee who's taking a lot of sick leave, but it's perhaps a little bit all over the shop. So it might be Monday this week, next week they're fine, the week after it's 2 days, etc.
So how do you distinguish between those, I guess? Is there sort of one cause for one and the others it's just a bit more random?
Well, I guess the cause issue, I guess, is a little bit why we're having this chat today, because in my mind there's not a clear legal framework for an absenteeism issue. So in relation to medical incapacity, if you've got an employee who's away for a long period of time, you can go through a medical incapacity process to terminate their employment. If it is absenteeism, in my view, there's not a clear legal framework to deal with that situation.
So if that's the case, what can an employer do, or what should they be thinking about if they are thinking like this?
So a lot of my employer clients, they do lots of different processes. Mm-hmm. So I see employer clients do it through a performance management process. They sometimes come up with a bit of an absenteeism process that's not dissimilar to performance management. I see them run it through medical incapacity processes. I've seen them use frustration of contract. But because it doesn't fit tidily into any of those categories, sometimes I see employers just go through a process to exit an employee.
Okay. I guess it's tricky as well. I mean, some employees might be taking a lot of sick leave, but I mean, I've got a couple of young kids. I know that it just comes out of nowhere, stuff like that, and it's not always linked, but you do just sometimes need to take that leave. So how, again, do you try and distinguish between those sorts of things?
Look, I think in my experience, if employers are getting clear communication as to why there's that level of absenteeism, and as you say, it may be an age and stage, right? You might have a preschooler who's just started preschool and they're catching everything that's going. But in my experience, where employers get frustrated and want to look to start a process is if there's not that communication, or perhaps the reasons keep changing for the reason for the absenteeism.
What about in the area of, say, mental health or stress as well?
And I think that adds another element of complication in relation to this. We've got some pretty clear case law now that says what you need to do if an employee raises mental health issues during a performance management process, and I would say that would be the same if it was some form of medical incapacity or absenteeism process.
So there was a recent case that looked at a lot of these issues, DQJ and the Commission of Inland Revenue. Can you just tell us a bit about that case? Yeah,
so at a very high level, the IRD were having issues with an employee, and she had a myriad of things going on. By reading the authority decision, she was unwell. There was an issue with her falling asleep at her desk from time to time. She was arriving late at work. There were performance issues. She wasn't wearing appropriate work attire, professional work attire. I think there was something as well around her driver's licence had been suspended. There was a lot going on. The IRD went through a process to terminate her employment for frustration, and that matter ended up in the Employment Relations Authority and recently the Employment Court as well.
Okay. Any other important case law to note in this area as well?
Well, I think if I briefly jump back to that case, what we kind of learnt from that decision. So to jump ahead, the Employment Court has awarded her interim reinstatement and pending a full hearing on this matter later this year. And it seems what the authority and the Employment Court weren't overly happy about is that the employer lumped a whole pile of processes or issues into one process and tried to wrap it up into a frustration process. Essentially, the guts of it is they should have probably picked one path and gone with it. So in a lot of ways, this case doesn't provide us a lot more clarity in relation to this issue. The case law we had before that, there's actually not a lot of case law on situations where employees are away all over the shop. There's lots of case law when someone's away for 3 months, 6 months, 9 months, but when it comes to absenteeism, there's not a lot. There's one case from a few years ago now where an employee was taking on average 24 sick leave days a year for a long period of time. It was about 6 years. She was given a verbal warning and that wasn't upheld by the Employment Relations Authority. So we're a little bit light on case law in relation to this issue.
So we're seeing a lot of legal reform in employment law at the moment. Is this an area that you think is ripe for that as well?
I think it would be really helpful to get some form of guidance, whether or not it be from the government or whether or not we get some case law, which makes it very clear what legal framework an employer should use when managing an absenteeism issue. I don't think we're going to get hard and fast rules like if you're away for 20 days, an employer can terminate your employment. I don't think we're going to see anything as black and white as that, but it would be really nice to get some understanding as to what framework can even be used.
The government's finances might be tight, but that's not stopping Finance Minister Nicola Willis considering tax changes to boost business investment. Stick around to hear what she has to say about the government considering cutting the corporate tax rate.
Finance Minister Nicola Willis. So how can you get the economy to grow faster?
Well, first of all, we have to set the conditions in which businesses are confident about investing, creating new jobs, taking on new markets, selling new products. That starts with getting inflation under control. Good news, it's back in band. Then we need to see interest rates dropping, so borrowing's more affordable. That's on its way. The next step is setting business conditions that build confidence, and that's why we're at work on the education system, on science and innovation. That's why we're building the infrastructure pipeline, why we're driving overseas investment and trade, and while we're working very hard to reduce compliance burdens and regulatory burdens across the board.
Quite a bit of that stuff's going to take a long time, right? It's not. So, I mean, I noticed too there's been quite an emphasis on tourism. Is that one of the short-term levers the government sees where you can maybe just give growth a bit more of a pick-up?
Yeah, just to pick up on the first part of that question, yes, some of the reforms that New Zealand is overdue to have do take a little while to implement, but that doesn't mean we shouldn't do them. In fact, my critique would be that in recent years there's been such a focus on the sugar hit that there hasn't been a focus on the underlying drivers of what has been extraordinarily low productivity. So we're a government that's grappling with those issues. In the short term, there's some obvious areas where we can grow the economy at pace. So tourism matters because it's currently below the levels it's got to historically. And if we get tourism numbers up, that's national income, that supports jobs and incomes here at home, and it's an obvious area where we know we've done it in the past, we can do it again. Similarly with the area of bringing in people on digital nomad visas and encouraging people to come in as investors, those are areas where we can get cash into the economy now and where our settings have been found wanting.
But in tourism, for instance, you're not seeing that as if you like, the pathway to higher paid jobs, are you? Because, I mean, tourism, hospitality tends to have lower paid jobs. Well,
it's to really address the immediate problem, which is that many New Zealanders are worried about the fact that they can't get a job. We have had rising unemployment, so actually tourism supports more jobs. And ultimately, when tourism operators are doing better, when our accommodation providers, our restaurants, our cafes are doing better, they're in a better position to pay their workers more. So it does support that. But of course, as you point out, that is accompanied by longer term reforms designed to address the underlying issues which have plagued New Zealand's economy, from slow delivery of infrastructure, very cumbersome consent processes, challenges to competition. We've seen massive consolidation in major industries, which has meant that consumers are paying the price with higher prices, and we're not getting the innovation that we'd like to see.
Well, talking about innovation and sort of on science, research and development, I mean, Sir Peter Gluckman this week talked about how New Zealand just lags well behind most other developed countries in terms of how much government spending there is on R&D, and that clearly drives productivity growth. Do you accept that? And within the budget constraints, do you have plans to up that investment?
Well, of course, the New Zealand government does invest pretty significantly in the science system in two ways: directly through our support of universities and Crown research, which we're now consolidating into more commercial-focused entities, but also through the research and development tax credit, which is pretty significant. When you look at the graphs comparing government and private sector spend, where New Zealand really is lagging down the bottom is that our firms don't invest as much in science and technology and innovation as their counterparts overseas. So that's part of the issue that we are looking at, is what does it take to connect our government-funded science system better with private firms so they face good incentives to invest in their own technology. And it's also why I've said, look, let's consider the tax settings and where they are, because I want New Zealand businesses to feel good about investing in new machinery, new technology, new ways of doing things, because when they do that, it supports activity in the economy today, but also supports the greater productivity that leads to a higher wage economy, and it's critically important we address that.
And you've raised that point, I think, in a number of recent interviews and speeches, which has kind of raised expectations among some people that you may be looking at the company tax rate. Is it that, or are you looking at the way you could provide some sort of tax and incentives breaks or what have you for investment in the sorts of things you've been talking about?
Well, obviously budget decisions are yet to be taken, and so Cabinet is yet to make the decisions. What I've been pointing out is, even if you just look at the headline corporate rate, New Zealand has fallen behind by that measure. But of course, underneath the corporate rate, as you point out, there are all sorts of other measures in terms of the way that our tax settings work. My focus, as I say, is I want to see New Zealand businesses and those thinking about investing here from offshore to see good reasons to invest in the things that we know will drive New Zealand's long-term productivity and wage growth. And that's about capital intensity in our firms. It's about investing in machinery and technology and the new things that would allow firms to produce more with the same resources.
But how constrained are you in looking at those sorts of things, given the state of government finances and your push to get back into surplus?
Well, those constraints remain, but a good finance minister should always be looking across the whole gambit of government spending and saying, what are the things that we should be investing in right now and for the future that will best support our goal to both have New Zealanders in work, but also ensure that their cost of living is eased, which for me comes down to two things. One, price pressure, and two, making sure that we're growing wages. And so in thinking about my budget, I'm not going to constrain myself to saying we're not going to think about anything in terms of productivity or capital intensity because times are tight. Actually, we owe it to New Zealanders more than ever to be contemplating those questions.
Well, I guess from a budget perspective, and if I put it this way, and you're looking at your growth agenda and trying to lift productivity, where would you see the priorities where you would look first to make it's an investment or whether it's a tax break? Which things stand out?
Well, I think that we don't achieve it all in one budget is the first thing I'd say. We need to look across successive budgets to see what's achievable. But also in my budget, I've been clear that focusing investment into our education system is absolutely crucial. We need money going to the front line of our schools, continuing to increase investment into our health system so that it can keep up with the needs of New Zealanders. That's critical. Increasing investment in our defence system, where clearly we are living in a less strategically benign world than we once were, and New Zealand needs to equip itself for those challenges. So there are a number of pressures on the budget, as there always are. But what this government has shown is a willingness to root out areas of expenditure across government that, while well-intended at the time, aren't generating enough value and impact for New Zealanders to justify being continued into the future. And it's a way up. We do have to say, do we want to be investing money in that thing that was well-intended and is maybe going okay, but actually those dollars elsewhere could deliver huge gains for New Zealanders, whether that's in our schools or whether that's changes in the tax settings that would encourage more investment.
You've also got quite a focus on competition settings. I'm just wondering, how do you balance up, promoting more competition against, I guess, the question for New Zealand as a small economy about the need for economies of scale to try and drive productivity?
Yeah, look, I just reject that false binary. It's really striking when you read the views of the OECD and other economists looking at the New Zealand economy that they say you've really got to regulate carefully to make sure that you're keeping competition going, because if you don't, you're going to get a lack of innovation, you're going to get bad deal for consumers. When you look across a number of our major industries, there's been significant consolidation, and the government, I think, does have to look at those sectors where the consolidation has occurred, supermarkets being the case in point, and say, actually, is that a good enough deal for Kiwis? Are we getting the so-called efficiency into Kiwis getting that benefit? And I think if you spoke to most New Zealanders after they've paid their bill at the checkout aisle at the moment, they'd say to you, I'm not seeing any dividend to me.
But why, in the banking sector, we've got 4 big banks, right? And then a range of other smaller institutions, including Kiwi Bank, and that's not competitive enough. Why will a third operator in the supermarket sector make that a competitive sector?
Well, look, that's the view of others who've looked at the market. They've said that currently there's it's got some duopoly behaviours, and that affects both shoppers in terms of the range of products, the prices compared to elsewhere, but it also affects suppliers who, if they can't get their products on one shelf because the margins are so low, will then often face a situation where the other supermarket chain rejects them as well. So having a third player that has a distinct identity forces the other big two to put better offerings forward. And so, look, my view on this is you look at the supermarket sector, we were told that significant mergers and amalgamations would be to the benefit of New Zealand consumers. I don't see any evidence of that.
In terms of another operator wanting to come in, is Aldi the supermarket
Look,
chains?
I'm not going to comment on proposals put forward by potential other operators, because obviously they do so with the expectation of commercial confidence. What I will say is that the offering I've made is we are prepared to take a direct approach to provide regulatory relief to an entity wanting to come in and disrupt this market. It's clear to me that there are pretty significant barriers to setting up a chain of groceries or supermarkets in New Zealand, whether that's getting permission through the Overseas Investment Act, whether that's getting consent through the Resource Management Act, whether that's actually obtaining a suitable site in some of our metropolitan areas, when a lot of those sites have in the past been land banked by the major supermarket chains. But there's a host of other issues that we may need to look at, whether that's labelling requirements, other requirements for someone bringing in groceries along from a different supply chain. So I think if providers offshore are aware that we're prepared to offer that regulatory relief, we could see interest from elsewhere.
One final question. I mean, you recently appointed Economic Growth Minister. What difference has that made to you, as Finance Minister?
Well, look, the big thing for me is it gives me a leadership role across a number of ministers who are delivering reforms which will support growth in our economy. And that's significant because by looking at that overall portfolio of work, I can make sure we're prioritising action in the right areas, bringing things together. For example, ensuring that our tourism and immigration settings are working in concert, making sure that where we are progressing trade agreements, that we're also supporting that on the other side by getting the right help to our exporters. But the other thing that I take a particular interest in this portfolio that I think it gives me the scope to do is identifying some of the problems in our economy that a finance minister has less ability to touch. And those are things like competition. There are also things like energy affordability, supply, and there are things like our KiwiSaver settings and how we support those. So I'm taking a broader ambit, and I think overall that's very helpful.
And finally this week, the Reserve Bank is greenlit to proceed with another cut to the official cash rate, despite US President Donald Trump's trade tariffs likely to put the squeeze on global economic growth. Here's Rabobank senior market strategist Ben Picton on the news and what's just around the corner. So Ben, does this set up the OCR to drop to 3% by the end of the year?
Hi, Jono. Well, we haven't updated our forecast yet, but they certainly sounded very dovish in the, not just in the statement and in the monetary policy statement, but also in the press conference. So I think it's fair to say that our projection, which we had, which was for two more interest rate cuts, two cuts of 25 basis points, there's certainly some downside risk in that forecast, I would suggest, and maybe the probability of hitting a 3% OCR has now increased.
What are some of the unknowns?
Well, there's plenty of unknowns. We have central bankers all around the world talking about the unknowns in relation to international trade. We have all of these tariff announcements coming out of the United States. Still a lot of uncertainty about which of those tariffs will actually come into force, because we have seen quite a number of them delayed. And also uncertainty around how those tariffs will impact economies in terms of first round effects and second round effects. So New Zealand is a small open trading economy, highly trade exposed. Anything that is negative growth in China is going to be negative growth in New Zealand. But if we're seeing more frictions in the global trading environment and we're seeing production occurring in different places and not necessarily in accordance to lowest cost comparative advantage, then over the longer term, that's probably inflationary. So a lot of uncertainties on the trade side.
But global growth is under threat this year, it looks.
Yes, that's right. And we've seen estimates of global growth sort of progressively revised lower. If we're seeing more barriers to international trade, then that is a negative for global growth. And when we have slower growth in the short term, we would generally expect that to put downward pressure on inflation. But there are some considerations around what happens to the prices of internationally traded goods. In the press conference today, Governor Orr floated the scenario where maybe if China is not able to export to the United States in quite the same quantities that they previously were, we might start to see some cheap Chinese manufacturers being dumped into the New Zealand market, and that might actually be disinflationary.
Is it concerning to see that inflation is bouncing around that midpoint this year?
I don't think so. I think inflation can be volatile with some of these internationally traded indicators. So things like the currency moving around quite a lot since around about the start of the final quarter last year, and some of the volatility that we've seen in energy prices particularly is going to shift that headline inflation rate around. So the RBNZ takes the prudent approach of sort of looking through these short-term effects and looking to the medium term, and they do sound very confident that inflation is still going to be sustainably within the target band and around that 2% level.
Do you think it's appropriate now to cut by 25 basis points?
Yes, we think so, and that's certainly the signal that is being presented by the RBNZ as well. So a slower pace of easing from here on out. We've had 3 cuts by 50 basis points. Now it makes a little bit of sense to maybe take the foot off the gas a little bit, and we saw RBNZ Chief Economist Paul Conway talk about this a little bit a few weeks ago, where they're not quite certain about what the neutral rate of interest in the economy is. So that maybe presents a little bit of an argument for taking a slightly more gradual approach, going in increments of 25 and doing a little bit of a cut and check type approach.
Is that the same story for Australia?
No, I think the story in Australia is quite different. So Australia had its first interest rate cut of the cycle yesterday. So it took the RBA cash rate from 4.35% down to 4.1%. Australia is an interesting case because there's some key differences with New Zealand. So firstly, the Australian Central Bank is dual mandate. They have a price stability or an inflation mandate, but they also have an unemployment mandate. They're supposed to target full employment in the economy. So for that reason, the Reserve Bank of Australia never took interest rates to be as restrictive as what happened in New Zealand. So New Zealand got up to 5.5%. Australia only got to 4.35. Australia has taken longer to start reducing interest rates because the economy has remained stronger and inflation has remained more entrenched. And the labour market particularly has remained much stronger in Australia. So there's indications recently that the labour market is actually retightening. And I'm sure that New Zealanders won't be keen to hear that, because we have seen flows of immigration from New Zealand to Australia being quite strong, and that strong Australian labour market has been the real drawcard there.
So the RBA may not be as vigorous with its cuts.
Yeah, certainly not. So the RBA really poured cold water on the idea of rapid-fire rate cuts in Australia. Even saw some commentators suggesting that it could be one and done. I think that's a little bit too pessimistic. We think that the RBA cuts rates 3 times in total this year. But there's probably a little bit of an asterisk over the third rate cut, we think. So the RBA is going to be taking a very cautious, graduated approach, and they are still concerned about inflation pressure in the economy, and that is not the case in New Zealand.
In New Zealand, do you think an OCR at 3 is too low?
No, I don't think so. I think that 3% is broadly in line with where we think the neutral rate is. We think it's maybe a little bit higher than 3%, but something that we've got to remember is that in New Zealand, we now have a substantial amount of spare capacity, a significant amount of spare capacity as the RBNZ described it today. And if we look at the numbers that they put on that, it's very similar to the spare capacity that the economy was experiencing in the very early days of COVID-19. So this is a substantial amount of spare capacity. And when that's the case, there's room to move interest rates to estimates of neutral fairly comfortably, and maybe even a little bit beyond neutral into accommodative territory.
And thanks again for joining us. Our news team is back from 5 a.m. tomorrow with the latest business news you can use on mbr.co.nz. See you next week.